Topic 1. Headlines show a busy, cross-sector moment driven by earnings season, AI investment, and shifting policy risks. Summary, 3 to 4 lines. Earnings season, accelerating AI investment, and rising policy and regulatory risks are converging across sectors. Financial firms are revisiting private credit exposures, while regulators probe recent failures and lawyers warn about AI risks in wealth planning. Logistics and real economy indicators show supply chain impacts, and overall this is a crossroads prompting reassessment of risk, disclosure, and operations. Details. Summary, a cross-sector moment where quarterly results, AI investment, and policy risk intersect. Banking and finance, private credit exposure has resurfaced during earnings season. Barclays disclosed about £15 billion of private credit exposure in Q1 and said it booked £228 million of credit losses tied to the collapse of MFS, a UK mortgage firm. UBS said private credit represents about 0.5% of its balance sheet, describing it as healthy and diversified, while Deutsche and Santander similarly downplayed losses or said they had conservatively provisioned. Market concerns. A BofA survey finds investment-grade investors still view banks and insurers' private credit exposure as opaque, while high-yield investors worry more about energy and inflation, showing different stress points across investor groups. Regulatory and policy risk. The MFS episode has drawn regulator attention, including an FCA probe in the UK, bringing liquidity and credit risk into focus for some BDCs and software lending segments. Earnings disclosures and regulatory inquiries are coinciding to raise policy and supervisory risk. AI and legal wealth management. High net worth clients are using AI chatbots, e.g. ChatGPT Claude, as utilities to check estate and tax strategies, but lawyers warn of wasted time from incorrect advice and concerns that uploading sensitive documents could forfeit data privacy and attorney-client privilege. Legal precedent. A federal court ruled that a defendant's inquiries with Claude about legal strategy were not protected by attorney-client privilege, suggesting AI use can create evidentiary and litigation risks. Logistics and real economy indicators. DHL beat expectations with Q1 EBIT of $1.48 billion and improved operating margin to 7.3%. Supply chain disruptions and rates rose amid sea and air route dislocations, war and trade frictions. The company is also running a large cost-cutting program. Overall implication: the earnings season, AI diffusion, and regulatory geopolitical shocks, trade and supervision, are acting together, prompting re-examination of risk assessment, disclosures, and operations across finance, legal, logistics, and other sectors, signaling a cross-sector pivot point. Topic 2. Energy and geopolitics pushed oil to 4-year highs amid the Middle East war. Summary, 3 to 4 lines. Fears of a US-Iran escalation and an effective closure of the Strait of Hormuz created acute uncertainty about global oil supply. Brent spiked intraday to $126.41, reaching a 4-year high, and WTI also climbed sharply. Brent nearly doubled since the conflict on February 28th. The supply shock risks reigniting global inflation and weighing on growth, while OPEC Plus and spare capacity constraints limit short-term relief. Details. Summary, key points, energy and geopolitical focus. Cause: fears of an intensifying US-Iran conflict and a de facto blockade of the Strait of Hormuz raised major uncertainty about world oil supplies. Anonymous sources reporting that the US is considering strikes on Iran also fueled the price surge. Price surge: Brent traded as high as $126.40 intraday to hit a 4-year high, later pulling back, and WTI climbed in the $108 to $111 range. Since the outbreak of war on February 28th, Brent prices have nearly doubled. Scale of supply shock: the Strait of Hormuz is a critical choke point carrying about 20% of global oil and LNG flows. A blockade would produce a major supply disruption. The IEA call